Welcome to the Proptech podcast. It's Kylie Davis here, and I'm delighted to be your host as we explore the brave new world where technology and real estate collide. I passionately believe we need to create and grow a sense of community between the innovators and real estate agents, and sharing our stories is a great way to do that, especially in these crazy times. Now, the aim of each episode is to introduce listeners to a Proptech innovator who is pushing the boundaries of what's possible, and to explore the issues and challenges raised by the technology and how they can create amazing property experiences. And my guest this week is Mark Trowell from the property management disruptor Yabonza. Now, Mark's first job was as a property manager, but he then became involved in banking, and many of you may know him from his time at Macquarie. He was recently a guest on the Proptech Association of Australia's Proptech panel, and he made some really insightful comments that blew me away about the scalability of property management and how the traditional model of geography and having a local office in property management is probably doing a lot of investors a disservice. So I wanted to get him onto the show and explore that idea further. Now, Yabonza is a full-service property management company that is direct to landlords and charges a fraction of the commission of traditional property management. But they are also increasingly working as an outsourced property management arm to principals who do not want the hassle of managing their own rent rolls. So here to tell us all about it, Mark Trowell. Welcome to the Proptech podcast.
Hi, Kylie. Thanks for having me.
No, it's great to have you on the show because we had a great Proptech panel a couple of weeks ago, and I was so interested in some of the comments that you made. I was really keen to get you on the show. But before we kick off, we always start with an elevator pitch. So what is Yabonza's elevator pitch?
Well, I guess in 30 seconds, direct-to-consumer property management, servicing both the client and servicing our clients, being both the tenant and the landlord. But really what the back to your point around what really we're solving here at Yabonza is there's a number of things. You know, we look at the industry and how it's grown probably over the last 30 or 40 years, and there hasn't been leaps and bounds in terms of technology changes in comparison to a lot of other industries that have had that sort of same leaps and bounds view and have been able to scale their businesses, create a lot of efficiency, create high transparency, more communication, etc. So if you look at those elements, it's going, well, I have to, create something that becomes very transparent. So to really give the client, and when I talk to client, I really mean like tenant and landlord in this case, a better way of seeing what's actually going on, to give them more comfort around what actually is being done on your property, because a lot of it really doesn't get seen today because, there's a lot of happening in the background with property managers that just doesn't get seen by landlords or tenants. We bring a lot of that to the surface so they can see what is actually happening in the background. The other one is that then therefore increasing the communication levels of, increasing the communication channels and how we communicate them and what we communicate with them as well. And then the third element of that is really just a wholesale change in the way the whole property management business is structured. Unfortunately, it's one of those things that was never really structured for the technology that is around today and to really leverage the technology and build scale. So in order to really find that efficiency, it's a wholesale change of the way that the business works. And it's bringing it down into very process-driven components or task-driven components, overlaying with a high level of service over the top of it to ensure that we give beautiful customer service to our clients, but really then enabling us to find that efficiency at the lower level, and finding that efficiency at lower level drives not just efficiency in pricing, but value in terms of the way the property is being managed as well. Everything through repairs and maintenance to the way that open for inspections are done. It allows you to then just really focusing on going, how can that just be done better, which saves the landlord more money, saves the tenant queries and all that sort of stuff. So really to create efficiency in what we call those everyday type of tasks, to then add further value to the client, being the tenant and the landlord, around how we service them. So not just efficiency in fee structure, but efficiency in operating cost, which then actually then saves the landlord additional call-out fees, or it might save the tenant angst in repairs and maintenance and all that sort of stuff, which adds up over time and really then looks at your return on your investment.
Yeah. So we're talking at a high level about efficiency here. Let's break that down a little bit more so that we so that it's a little bit more humanized. At the old model, I guess, of property management is that property management requires you to collect rent. It requires you to find a tenant, collect the rent, get them onboarded into the property, maintain the property and fix any repairs and maintenance, and do a regular inspection to make sure that it's not being damaged. And then when a tenant leaves, do all the post checks. And the traditional way of fixing that was always put a person in it to do all of those things, right? How does Yabonza do that differently?
And let me just say, I feel sorry for that person.
Oh, yeah, I know. I think property managers have the toughest jobs.
I was that person about 29 years ago.
Oh.
That's where I started.
Right.
I know exactly what they do, and I feel sorry for them. I mean, it is an industry that, unfortunately, they sort of wear the brunt of everything because there is just so much going on in their everyday lives. There's only so much time or capacity they actually have, and so it doesn't really allow them to what we call work on those higher value tasks for the clients. So a couple of examples you said there, I think one was around payments, one was around repairs and maintenance, one was around efficiency around inspections and property condition reports and those sort of things. There's a number of things we do. First of all, we look at property like data, has a lot of data elements, and we look at processes in terms of standard workflows. Now, it's never going to capture 100% of what you get, but you'll capture the bulk of what you get. Now, if we just break it down into payments, for example, we acquired a company called EasyShare, which is a payment gateway, and that was actually already operating in the tenant side, aggregating rental payments and able to split bills and all that sort of stuff. So we looked at it and went, what we need to achieve here is a way that we can get what we call more straight-through payments. Instead of having money come in, sit in trust accounts for whatever it is, 2 weeks, 3 weeks, 4 weeks, or whatever it is, it's not our money, it belongs to the landlord. How can we create efficiency around that? Because there's a lot of back-end work that has to go around maybe in the real estate world, with reconciliation trust accounts and the way that they pass the money through, and then the recording ledgers and all that sort of stuff.
Yep.
And by us acquiring EasyShare and plugging it into our system, which was then able to disperse to the landlord, what we created was a straight-through payments methodology. So we could take from either one tenant or multiple tenants. So we didn't have to have the concept of lead tenant anymore. We could aggregate those payments, and they would then pass through the payment gateway, and then we would then run automatic disbursements on the other side. So this would be any fees owing, any outstanding or any outstanding approved invoices, and then the net funds dispersed to the landlord's nominated account straight away. So that's just one thing around it.
That's not that's not blockchain, is it?
No, it's not blockchain yet.
Not yet.
Not yet.
Pre-blockchain.
Wait until we bring our own currency, and then maybe we will.
Okay. All right. Yeah. Cool.
So that was payments, and so that creates a lot of efficiency around payments. It allows us to record things in a different way. It allows us to track payments in a different way, and for the landlord, the money's there. They're not waiting for longer periods of time. And then it also gives us the ability to bring in more methodologies of payments that we can actually use, eventually blockchain. But it opens up all those opportunities. And not just does it open up opportunities then in terms of just the way that payments are processed all the way through, it opens up a lot of opportunities on our tenant side. So our thing around the tenants is, again, how can we create beautiful experiences for the tenant? Because the better experience we can create for the tenant, the better it is for the landlord. And the more value we create in that rental for the landlord. And a good analogy of that right now is there's a lot of build-to-rent zones coming to the market. We've probably seen it with companies like Murdoch. And as an individual landlord, how do you compete with that when their pure focus is around creating beautiful experiences for the tenant? Right? They're putting various services in there. They're making payments easy. They're looking after their lifestyle. They're all doing those sorts of things. So if you've got a landlord that's got a property right around the corner from a build-to-rent property, the build-to-rent property is going to be quite desirable. So how do you compete with that? You've got to compete on the service level. And the way that we look at tenants coming into a property is you've got to look at them the same way a hotel looks like. They're a guest.
Yeah.
The reason you're able to collect rent on your property is because you've got someone that wants to live there and they've chosen your property. So how do you make it desirable? And it's not just a case of it's in a good location and the rent's right. It's how do I give them a service that they want to come in and actually expect. That's how you differentiate two hotels in the same sort of area, right? What service I'm getting? Why is that a 4-star hotel versus a 5-star hotel over there? And some of it is, they've got a concierge, they'll help me out, they'll do these things. So our payments gateway allows us then to open up opportunity around tenants. And we look at going, how do we make a tenant's life in that property as simple as possible or as easy as possible? And so then it opens up the ability for us to look after the administration of that tenant or of that household. So we can facilitate bills for them. So not only are we doing it now for the property, but we're doing it on behalf of the tenant. No matter what bills you have, redirect to the platform. It's a one-stop shop for you.
Oh, so fantastic.
Great. And then that really then creates value because they go, well, this is what I want. More people now moving towards, I just want my life, I just want my general life admin looked after. I want everything in that property looked after.
Absolutely.
So let's make it easy. Let's make it a one-stop shop.
Yeah. Well, I love so much that you're looking at tenants as a guest. That is pretty revolutionary and completely flipping the traditional way of thinking about tenants who are just people who are too poor to afford a house. And I think that is actually part of what needs to happen in the industry. It's great to see.
Correct. Absolutely. They're there for a reason. You want to make their stay as best as possible. And the better you make their stay, the better they treat the property as well.
Yes.
So it's a two-way win. And the more value then, therefore, it allows the value to the landlord to recognise.
Yeah. So Mark, we talked about payment efficiency, but how does a single centralised tech business in property management be efficient around things like, inspections or, but yeah.
So what we've done there, I guess one of the unique things is we looked at this and went, how do we scale a business? And it was really breaking it down into the physical elements and what we call the non-physical elements. The physical elements mean why do you need to be present or near a property versus what can you actually centralise. So there were the two differentiators. And the things that were the primary drivers around the physical components were property condition reports, routine inspections, open for inspections, and holding keys.
Yep.
So they're the things you have to solve. You solve those, then you have a scalable business. But you didn't just have to solve them in such a way that, we're creating another localised property manager. What we had to do is solve it in a way we could scale really quickly and still, again, look at the level of service that we're actually getting, the efficiency component of it. And what we actually did in that area was create our own on-demand workforce.
Right.
And predominantly they will have to be licensed. So we know that there's a certain level of standard that they have to hit. We put them through a certain level of training. They're all branded. They're given all of they're given all the technology. So we really make it quite efficient for them. So when someone enters the house or the property or the department, the actual work starts. And when they actually leave, the work's finished because everything's uploaded back into our own platform.
Right. Okay. No clipboards.
Sorry?
No clipboards.
No clipboards. All electronic. all trackable. All traceable. And it was quite interesting because one of the things that we actually were questioned on, people said, well, what about quality? Yeah? What about the standard of quality of these people? But what we actually found was quality went up, not down. Right. Because we were finding these people who then didn't have the same pressures, I guess, of an existing property manager that we spoke about earlier on, right? Where they're out there doing everything. And some of the biggest usage of their time is actually context switching. A property manager might be in a property where they're trying to take repairs and maintenance calls at the same time they're trying to handle tenants and landlord queries, and they're spending all that time travelling in a car and all that sort of stuff. So there's 1,000,001 things going on.
Yeah.
But what this on-demand workforce was is they were already licensed anyway, so they know about property management. So they go in there and they're focused on one task. They're focused on just that job and nothing else but that job. So they go in there and it's all about them executing on that piece of work. And because they're an on-demand workforce as well, it's the same sort of thing as an Uber driver, right, or anyone else. You're kind of rated. If you've got to work to a certain standard, because if you don't, there is no kind of fallback option. So it is what I would call a self-regulating type approach to it.
Right.
And because of that, you've got people that are wanting to come in there and run those work and do a really, really good job. I mean, we're pretty impressed with our on-demand workforce and the way they actually work and the standard that has come out of it as well. And so that really looks after a lot of the condition reports, routine inspections and open for inspections. And then holding the keys is the final thing we had to solve because we know what keys are like. But we actually, what we did is we rolled out, we have a business called Yabonza Keys. And whilst there is still physical keys on the network and there's no digital keys out there yet, or the uptake hasn't been as quick as it could have been, we rolled out a company called Yabonza Keys. And what we actually do is we partner with convenience store chains, so generally 24/7 convenience store chains, and we actually put locked boxes in those. All the keys are coded, they're all tracked with NFC devices, and anyone that needs to pick up keys from a certain property, they're able to actually go there, they're handed out a code, the operator has a device in store, and then it tells them what keys to actually give them based on the code that's been passed across. So it's actually a very good trackable service. And it actually took on a life of its own because it now actually services a lot of Airbnb properties. So we opened it up to the general community, and we found that a lot of it was there's a lot of things that other businesses that prohibit scale, and things are like on-demand workforces that you need to solve, things like keys. And what we found, it started to solve the solution for Airbnb hosts or short-term accommodation hosts. And so we now have a lot of short-term accommodation hosts constantly booking their keys into these sites and asking us to open more and more sites across the country. So it's actually taken on quite a life of its own.
Cool. Oh, that's very cool. So how big are you guys now, Mark? Like what cities are you working in?
Yeah, our coverage is everywhere.
Oh, awesome.
Everywhere. Okay. So one of the things we set out to do is if you want to be scalable, you truly have to be scalable.
Yep.
You can't then say, I'm going to put a local property manager in a certain area and just build around that. We have to solve these elements around making it scalable. So to give you an idea of our coverage, obviously the main capital cities is a kind of a no-brainer. Sydney, Melbourne, Brisbane, Adelaide, we're actually all of them, including Darwin. But, to give you a reach of the properties we've got, and obviously they're hotspot and they're bigger concentrations in capital cities, just given that the fact there's a lot of property there. Yep. But we've got a lot of landlords coming onto our platform that own multiple properties. And so they may own properties in capital cities, but they also don't own properties in places like Mount Isa, Alice Springs, Launceston, Toowoomba. I'll name just a few, Ballarat, Bendigo. These are all places that we actually manage property as well. So that's what we had to solve. It was a one-stop shop. As a landlord, come on, doesn't matter where your properties are, we'll manage it on a one platform for you. So you can bring multiple properties on, and you can consolidate your portfolio into one area. And London, actually.
Oh, okay. Awesome.
Yeah. So manage a handful of properties in the UK too.
Awesome. Okay. And now let's hear a word from our sponsors. For almost 16 years, Direct Connect has made moving easy for over 1.2 million renters and homeowners by arranging connections to a wide range of services, from electricity and gas to internet and pay TV. With a national team of local account managers who are experts in the industry, Direct Connect are there to support your real estate business with competitive rewards for every successful connection, plus an industry-leading rewards program. The connection process is simple, and Direct Connect's always-on guarantee ensures your customers will be connected on the day they move in. Direct Connect offers a range of market-leading suppliers, and Direct Connect has now made it even easier than ever to send connections, directly integrating with MRI Software's Property Tree. So in just a few clicks while processing a tenancy, you can send the connection details through and get your customers connected. To make the right connection and find out how Direct Connect can make moving easy for you and easy for your customers, visit agents.directconnect.com.au or call 1300 558 169. So I'm just going to sort of double back a little bit to confirm, like you guys are actually a direct to landlord property management service. So as a landlord, I don't need to do it all myself, like I would with an InstaRent. But you're a property management service that that landlords can basically see all of their properties inside your service rather than having to, like we do at the moment. We have, one on the Gold Coast and one in Sydney, and they're both managed by completely separate businesses.
Absolutely. It's about consolidating consolidating the portfolio into one area so you get a better read of it. You're absolutely right. It's full service. So one of the things, apart from then creating efficiency in what we call a process area, what we actually recognise is the value to landlord and moving people up the value chain. Right? So if you can create efficiency and automate processes at a certain level, then you're able to bring people up into what we call higher value tasks. And those higher value tasks for us is the introduction of what we call the Yabonza asset manager. And their whole role is to say, okay, you've got a property and you've obviously bought it for a certain reason, this investment property, it's either income or capital growth. How can we make sure that you're getting the best performance as possible for that property? Let's look at, it's not just a case of every 6 months trying to stick up or 12 months trying to stick up a rent. It's what is happening in that particular area. What are some of the influences that can change it? Let's look at structuring. Are you eligible for things like tax depreciations? What is your mortgage situation look like? Can we refer you on to anyone else? So it's really then working with the landlords to say, let's maximise your ROI on that property. Be it if you're after capital returns, is there anything that we can help with that will make it better capital returns over time? And then can we refer you on to those services? Or is it just straight rent? What can we do around that? So we are constantly tipping more and more data into that area to really give landlords better insight into the performance of their property, how it's performing against other properties in that particular area, why it might be performing worse than properties that seem similar in that area, what changes they might have to make to that property to get better performance out of it. So we start looking at property on that sense, which is what we call genuine asset management.
Yeah.
And we then have brought in a similar concept for the tenant, and we brought in what we call tenant customer services. And we look, because we know the value of a tenant, i.e. we want to make their stay as best as possible. How can we service that tenant in such a way as well that adds value to them?
Awesome. Okay. And I guess that's where that payment system comes in, and the ability to pay other bills as a tenant through.
Absolutely.
Cool. Okay.
One-stop shop.
Yeah. Okay. Awesome. Yeah. No. I like that as a philosophy. So how frightened should property managers be of Yabonza?
I think property managers themselves shouldn't be frightened. I think every industry goes through evolutions or changes along the way. I think you've really got to look at what this means for your own business and how you embrace that. How can you adapt or evolve? What is it in your business that you like? What is it that you actually want to do? Obviously, it's different for, I guess, real estate principals who own the rent roll versus the individual property manager. But I mean, if you kind of separate those two people, well, the individual property manager he's just giving you the ability to focus on opportunities that can plug into a service like ours. I once gave a speech to a few property managers, and one of the things I drew on was the Airbnb style thing. If you look at Airbnb 10 to 11 years ago versus Airbnb today, and the companies now that service Airbnb that are around it weren't really in existence 10 to 11 years ago. But look at all the opportunity that created. Another good analogy of this that I once used was as an iPhone. Right? So Apple created this great device, put it into everyone's pockets, created the iOS, and now there's, I think, 1.3 million apps on the App Store. Yes. That's 1.3 million opportunities that got created in the last, iPhone 14, 15 years now?
Yep.
I mean, that's opportunity. So it's the same in the property space. There is so much opportunity in this space. So you really got to then seek out what it is that you're actually after. You've got good skills in a property management domain. Start specialising some of those. Start creating even micro businesses that can service businesses like ourselves. As we scale, as we move into all these different areas, we will consume certain services. And there's things out there that we haven't even thought about yet that people will come up with an idea and that would be a great idea. Well, we become a platform to say, why don't you plug an idea like that into our platform? And so I think that's one thing that you've got to look at. One is what opportunities will be created in the future from platforms like Yabonza or other platforms that come along. What does it mean for them? Can they leverage that?
Do you have any examples of traditional property managers? How are they working? Can they work with Yabonza, or is there a way that Yabonza can plug in to support a traditional real estate agency?
So traditional real estate agency, yes, definitely. We've actually recently focused a lot of our attention on traditional real estate agencies. If we look at some of these, real estate agencies that have small portfolios, it is for a real estate principal, what are you actually after? A lot of them are focused on sales, and that's where they like doing it, and they don't necessarily invest too much in the property management side. And they're the ones that are at risk in terms of valuations to rent rolls and where they might fluctuate and where they might end up. Well, how do they kind of future-proof themselves? So we've created mechanisms to actually work with existing real estate agents where we're basically saying you can still build an asset or a portfolio and generate income from Yabonza and still stay in touch with that, and effectively then ride in that kind of Proptech wave and become a part of it. So, and still then stay in contact with the clients, because a lot of these people, what they want is the resales. Now we're going to move into sales, and we have no plans of moving into sales. But certainly if you look at the average portfolio, which will be churning, say, 5 to 10% a year from sales, depending on where it is, we've got to ourselves seek opportunities in the sales area. Where do we funnel these sales to? Because we're going to have landlords coming to us and saying, "What shall we do?"
Yep.
So we see an ability to have quite a close collaboration with existing real estate agents. One which is saying, "Well, we can certainly bring on your rent roll, or you can continue to build, I guess, an asset under Yabonza, which you can then recognise the upside into in the future, and probably a bigger upside because we know where kind of Proptech heads versus where traditional valuations are heading, and still derive an income off that." So we've created a number of models that now allow real estate agents to leverage.
Awesome. So I guess if you're a real estate agent out there, or a real estate principal out there, and your property management is just a major headache for you, you've got constant turnover of staff, and the whole idea of upgrading or modernising your tech just makes you want to run out of the building, maybe give Mark a call. I'm going to give you a plug, Mark. I should give you a call. So how does your charging work? Who pays for you? The landlord, I'm assuming.
Who pays for us? Yeah, well, 3.1%. Yes, you're right. The charging still comes out of our management fees. So the 3.9%. We've created a lot of efficiency in what we do. So our unit economics is greatly reduced from a traditional model in just the way that we're able to scale the business. We don't scale on a linear basis anymore. I think, by memory, the average is about 106 per property manager. Obviously it fluctuates. You've got a few that are quite a lot more than a few quite less. But if you're looking in that 100 to 150 range is generally the scale. And as your business grows, as a traditional business grows, you generally find that the scaling actually gets worse. Yes. You've got overheads of different management layers that get brought in and all that sort of stuff. So we've broken that, and we've become exponentially scalable. So that was one of the key things in our business, is that we have to move away from that. And because we've moved away from it, it means that as we get more properties under management, the margins actually become better anyway because of the exponential scaling behind it. So therefore it saves those savings that are directly passed back on to the landlord, and then we make our money from there.
Awesome. Okay. So basically that whole idea that every time you get 100 properties on your books, you need another property manager, that's also the business model that you're breaking, or that your system is breaking.
Absolutely. We've moved from what we call a linear scaling approach to an exponential scaling approach. What it does mean is that in our earlier days, we didn't work well with only a few properties under management because we have to have a certain foundation built into it. That if we're only going to be managing 100 or 200 or 300 or even 400 properties, our cost is quite high. But as we move into 1,000, 2,000, 3,000, they drop quite a bit.
That's when you need some really good investors to believe in what you're doing. So tell me a little bit about your background. How did you, about 29 years ago, as a young teenager, you were property managing, but what have you done in the meantime before you set up Yabonza?
Actually, I was, you're right, 29 years ago I was property managing in Australia. I had my real estate license back then, and I actually then moved to the UK straight after that and did the same then. So I was a property manager in London for a couple of years before making a logical leap over into banking, as you do. It's a very similar fields. The reason there, I had kind of an accounting, and apart from property, I had an accounting and a bit of a law background anyway. And my role in banks were always to find efficiency. So I worked at quite a number of investment banks in the UK for about 14 years. And all of those roles were implementing technology to find efficiency, in some in trading systems, some in payment systems, some in reconciliation systems. So it was always around how can we take someone's role and create value out of their role, i.e. by automating or creating process efficiency, and some of it was just business transformation and just changing the way businesses were structured, or parts of the bank were structured, to then move people into what we call higher value roles. Things that are more customer focused, things that are more client focused. So that was probably a 14-year banking career in the UK, and then I moved back to Australia in 2008, just as the GFC kicked in.
Fun
Just good
times.
timing.
Yeah.
And I started working with Macquarie Bank. So Macquarie Bank is quite active, as I think most people know, in the real estate space. And I was at Macquarie for nearly 9 years, and probably the last 5 or 6 years, I think it was actually in there running some of the innovation and real estate technology with Macquarie Bank. So it gave us a really good exposure to a lot of the real estate agents around the country. I mean, their stats are that they bank 40% of real estate agents and 70% of strata managers. So they're very active in this space, and they're very well experienced in this space as well. So it was a good tenure at Macquarie Bank. But it did give you the exposure to an even deeper, broader industry exposure around the problems that the industry was faced, and a lot of that is around the scalability of the businesses, the fact that these businesses are still quite local, not local in terms of their outlook. That's fine to be local in terms of an outlook, but local in terms of the ability to leverage scalability, to leverage efficiency, to leverage an exponential scale versus a linear scale. And even at Macquarie, a lot of the technology brought into these businesses couldn't actually leverage it because of the way that the businesses were actually fundamentally structured. It needed a wholesale change to the way the business itself was structured. So they were hamstrung around the business model as much as they were around technology itself.
Yes, and that's what we're seeing right now, isn't it? I mean, where the technology's been around and developing quickly over the last 5 years, and people are starting to become familiar with it. But the thing that's actually holding up the change is actually the fact that the business model is actually harder to envision than the technology change.
Absolutely right. Yeah. And if you're a local agent in operating in a local area, how do you do that?
Yeah.
And that's half the battle. And they're the ones that are going to look there and see the value of what the business they've built up being consumed by larger players coming through. Hence, we see them as an opportunity. Then, how do we collaborate?
Yeah, awesome. As a real estate agent, you need to be doing more content marketing. But creating posts for social media, creating videos and reports is hard work, lots of hard work, and it takes time. So that's why you need HomePrezo. If you're a typical agent posting 1 or 2 social media posts a week, HomePrezo can save you between 75 to 100 hours a year. How many more properties could you sell if you had that time back? HomePrezo can help you create engaging, informative videos about how the property market in your local suburb is performing. Plus, it makes creating suburb reports, rental videos for landlords, and social media infographics an absolute piece of cake. If you can type in a suburb or type an address, you can create a Prezo using HomePrezo in just a few minutes. Listeners to the Proptech podcast receive a 14-day free trial. Now that's twice as long as the normal free trial. So go to homeprezo.com.au and click the sign up button and use the code Proptech to get your extended free trial. Or click the link in our show notes. So, look, there is a lot of competition going on in this sort of direct-to-landlord space at the moment. I mean, you guys are out there. There's there's a whole bunch of tech and Australian tech coming out in the space. How do you find that you compare, or what do you see your differences are?
Well, Firstly, I think it's great that there's a lot of there's competitors.
Validates the idea, right?
I think if you were the only one, you'd have to ask yourself a question about, well, am I doing it? Where's the validation in it? But I liken it to a lot of the buy now, pay later companies, right? Your Zip, your Afterpay, et cetera, et cetera. The more they're kind of coming in, it's educating the client, and that's kind of how I see it now. As competitors started to come into this space, it's really educating the client. Well, there's an alternative way of using a traditional property manager. Maybe I need to look at what I'm doing over here. So I think you'll get that momentum really starting to shift into this kind of new platforms, I guess, new way of handling property management. In terms of nuances, I guess what we do differently to some of the others, I guess probably one of the biggest differences, versus your different and your proper and some of those ones is we went out to say, how can we operate everywhere without necessarily having to put a direct property manager on the ground in that area?
Right.
And that was the big thing, because we looked at landlords coming on and landlords going, that's great, you can take that property, but I've still got 3 other properties over here with other property managers. I still have that kind of headache going, I'm managing multiple property managers. So how do we look at whole portfolios? How do we look at businesses that can really scale and become agnostic of the area that we're in? So that's probably one of the biggest differences that we have to different and proper. And then we looked at that next layer down, technology layer, which is the wholesale change. It's task-based versus portfolio-driven, everything around a property manager. Now, different and proper, I know, kind of moved into some of those areas, which is good, and we're all kind of finding a lot of efficiency, hence we can pass the savings on in that particular area. Mm-hmm. But I guess our main point of difference is that how do we scale and how do we flip that around to say, let's just make all of that client service. I'm sorry, I should also say one of the other things, and running our own payment gateway.
That would differentiate too. So with COVID, and the anxiety around economic uncertainty and the impact that's having on investors and landlords, and if rental payments, rental freezes and stuff like that stop, we're expecting to see the whole, investors sort of flood the market a little bit and start to pull out. How are you guys seeing, what are your thoughts around how that could play out?
First of all, I guess what we've seen, what our data is showing us, actually one of the unique things here is because we're agnostic of area and we actually start operating in a broader area across Australia, the data actually is starting to show us some quite interesting things, which areas are being more heavily impacted by COVID.
Yep.
And even right down into which industries are being impacted by COVID, because we collect a lot of that data and we're able to actually see it. But ironically enough, we've only really seen, I think there was a total of about 10% of our portfolio actually in the early days requested rent relief, of which really only I think it's about 4 or 5% of it went through in some form, which may have been rental reduction or rental pause and making that up in the longer term. So I don't think we've probably necessarily seen the full impact of it yet. I think whilst JobKeeper and JobSeeker are still out there, it's probably still propping it up slightly. It'll be interesting to see when some of that economic stimulus gets pulled away to see what happens in the market at that point of time. Mm-hmm. But I think what we are seeing is certainly a shift. We're seeing some of the CBD areas themselves, the vacancy rates probably starting to climb up a little bit as more people are going, I don't need to necessarily be closer to a city. I can move to, say, for example, from Sydney to a Central Coast, or I can move up towards Queensland. I can migrate into some of these potentially regional or fringe areas if I'm working from home 3 or 4 days a week and I don't have to necessarily pay that full rent there. So we're seeing a shift in the market around that. So we're seeing rents come under pressure in some of those more CBD areas and yet starting to rise in some of those fringe or outer areas.
Awesome. Okay. Well, that's really interesting. So look, Mark, I'm conscious of the time. What do you see in your crystal ball for the next 5 years in property management? How do you see it's going to change? Where are we going to be in 5 years?
I think what we'll see is a lot of consolidation come into the market. Yeah. I think certainly you'll probably end up with maybe 3 or /4 different types of verticals of the way that property is managed. You'll have your traditional existing real estate agents, and I think they themselves will start to consolidate. We'll get a consolidation in that part. You'll get kind of the where the self-managed model to take on. You really get that vertical growing, and then you probably get in the vertical where we are and different is, and that kind of properties, which is that platform space, and there's probably a little bit of differentiator within those various models as well, and people come to the market with different nuances. So I think you'll get really those 3/4 verticals really playing out, and I think you'll probably start with a shift now moving into either self-managed. As self-managed becomes a lot more efficient, I think you'll get a shift of some people trying that out, and then you'll get a shift into that kind of newer models where kind of we sit, and I think in your localised agents or the smaller ones will start to be consumed. You get consolidation in that area to try and bolster the business. So you'll get larger managers of property. It'll move away from the smallest managers of property. So you get larger and ones with larger reach across the country. And I think the biggest thing is around what I would call double-sided marketplaces. So you'll then get the offering for the landlord and the tenant increase. So I'll still understand the value around the client, and it'll become very client-focused, which is a really good thing. So how do we give more value to our landlords? How do we give more value to our tenants? Our technology enables us to do it. So I think you'll get a lot of value proposition for both both ends of the client. And starting to take shape as well.
Awesome. So what does the future look like for Yabonza? What's on your roadmap?
Our roadmap is continued expansion throughout Australia. Growth is where we are right now at the moment. So we've got some good things on the horizon. I can't allude to just yet, but we've got some pretty big growth on the immediate horizon, which is pretty good.
How many properties are in your portfolio? Are you able to say?
We can't say just yet.
Okay.
I can tell you.
But I'll have to kill you.
We've got a good spread. Our pipeline is extremely significant. I can tell you that. So we are actually almost dialing down a little bit on the B2C side of things, because the pipeline we're seeing what we call our B2B2C space, or the collaboration with existing real estate agents or groups, is starting to really strengthen, and that builds critical mass very quickly. So I would say we're spending a little bit less on the whole B2C and collaborating a lot more with existing agents and existing businesses that have what we call influence over landlords and tenants. So that's where a lot of our focus is, and what that has done has built a significant roadmap into the next sort of circa 12 to 24 months. Our way there is to get a good base right across Australia, and it will probably then kick off about, I would say, mid to end of next year, which is our expansion then into the UK. As I said, we've got a small footprint over there. There is a lot bigger disruption to be had in the UK.
Oh, yes. Yeah.
Pricing is actually the same in the UK as it is here.
Okay.
And there is a lot of legislative changes coming in the UK. They're not currently licensed. There's no trust accounts. There's not a lot that's going on over there. So, the way we build our platform is very universal. So, what we build for Australia, we need to make sure it's resilient to other geographies as well. And I guess that's one of the beauties of building our technology from the ground up. It also allows us to plug other technology into us quite easily as well, and collaborate with other technology providers, which we do. But so our roadmap then is really then to back end of next year expand in the UK.
Awesome. Okay. Now I've got one last question for you. Where does the name Yabonza come from? What's the story behind Yabonza?
We were actually in the UK when we came up with it.
And feeling homesick.
Well, there's two stories. One which is kind of a play on Aussie slang, which is Yabonza is kind of it's good. Bonza being good, and the other one being that it's disingenuous. It doesn't mean anything.
Right.
So really what we didn't want to do is fall into a trap where we had property management or rent or anything like that trapped into it, because you get siloed into a particular area. And, as we know, the property management space grows and the ability to offer additional services to tenants and landlord grows. You don't want to kind of be pigeonholed into a certain area. The other thing is it's disingenuous, so we can make it what we want. But the other thing is also you had to find a name that the webs you could own everything around that name. So, and we do. We trademark everything possible around the name Yabonza, and it's completely unique. So no one can own anything around that name that way. So when you hear the name Yabonza, that's it. It's just us.
It's you guys. Yep. Fantastic. Well, look, it has been absolutely fabulous to talk to you today, Mark Trowell from Yabonza. Thanks so much for being on the Proptech podcast.
Thanks very much for having me, Carly.
So that was Mark Trowell from Yabonza, and I thoroughly enjoyed this conversation. As many of you know, I do love a big brain, and Mark has a unique take on the future of property management and how the industry can adapt to the change that's being thrust upon it. I love how Yabonza gives landlords the opportunity to have a whole of portfolio view of their investments, regardless of which state or suburb they're located in. And they also have that physical inspection side of the business nailed down. As someone who has 2 investment properties in 2 different states and who has had 2 very different experiences with their property managers, I find that really appealing. Now, if you're an investor or landlord, how tempted have you been to move across to a property management disruptor? Or are you already using one? I'd love to hear your thoughts. Drop us a line. So now, if you have enjoyed this episode of the Proptech podcast, I'd love you to tell your friends or drop me a line via email, kylie@realcontent.guru, via LinkedIn or Facebook. And you can follow this podcast on Spotify, Google Podcasts, Anchor, and Apple iTunes. I'd like to thank my audio support, Charlie Hollins, the fabulous Jill Escudero, and our sponsors, Midge Wines, exclusive wines made in limited quantities and available only via Celador at smidgewines.com. Direct Connect, making moving easy, and Home Prezzo, now part of Active Pipe and making real estate marketing easier than ever before. So thanks everyone. Until next week, stay safe and keep on propteching.